Hello everybody and welcome back to 5 Minute Crypto, the channel where we cover the most important crypto news in just 5 minutes, back again with another crypto update. Bitcoin whales use a lot less Bitcoin to move the markets in 2021 compared to 2017, and here is exactly why. This is not our only subject of today, as I basically want to explain to you guys a little bit more about this $30,000 level for Bitcoin, the huge accumulation of the whales, and a couple of other small parts. Now, to start it off here, some person basically found a different pattern that is in the markets right now in comparison to 2017, and that is in the realized cap hold waves. Basically, there's this accumulation and distribution, where accumulation is when experienced stakeholders are buying at a discounted price, usually because there's some FUD among the newcomers, and distribution when the sophisticated market makers are selling back to new investors at an inflated price. Basically, let's say there's supposed to be a certain level of price, well, these market makers basically manipulate the market to some degree, in this specific case here with 15, 25, and 35% moves. And right now those moves in 2021 have significantly changed to only around 5% or so in comparison to a huge increasing wave back then. And some people are pointing out that this is extremely relevant. Some others are saying no, it has no relevance to the real world whatsoever. I just wanted to quickly put it up here, as we've seen multiple different articles of whales just buying and whales manipulating. Even on the DustDBC channel, I actually talked about this a couple of times, explaining to you guys how there's huge amount of whales buying the dip, even though you don't really see it. On the forefront, these big banks and these big institutions are really hating on it to a very far degree. Yet in the background, if you look at institutional adoption throughout 2021 and the end of 2020, it's been insane. And it's only been increasing, and the amount of institutions exposed to Bitcoin is now greater than ever, and will most likely keep getting better and better and better as time develops itself. It's really quite staggering, really quite amazing how huge these guys are in this space as well. Here are signs of whale accumulation, but where is Bitcoin potentially heading if $30,000 breaks? Well, that's actually kind of the video summarized to some degree as well. There's huge amounts of people buying, specifically institutions, but still $30,000 for Bitcoin is an important price zone. Why and what does it mean? Well, $30,000 for Bitcoin is something that held up for a really long while right now, and it's also this psychological barrier. If we break it once, not really that big a deal, but if we close below there and stay below there, really, really bad ordeal. Really, really bad ordeal, really, really bad ordeal. On some exchanges, we actually tested it below $30,000 prior as well. You can see here, we actually did it on Bitstamp. We hit about $28,500 if I'm not mistaken. Yet, it wasn't really a, close. It wasn't really anything too significant. And right now, people are thinking we're going to bounce from this $30,000 level and upwards. And if we break to the downside, however, a lot more downside is about to come, because the pattern over the last couple of weeks that you can see right here from like the end of May basically has been sideways, sideways, sideways with a little bit of a downwards bias. However, if we were to break down below 30,000, it's basically kind of done from being within this range. It's basically here a $40,000 to $30,000 range that we've been in for 2 months now. If you break below 30 or break above 40, the pattern has changed, and so more negativity is about to come, or more positivity could be coming. But we're leaning more towards the downside, and that's also seen here. This never seen before Bitcoin trend can lead to further downside. Whatever. I mean, is this the only article I've seen about that? No, there's tons of different articles posting that. Yet once more, the institutions are still buying. They don't really care. They don't really care about any different statistic or analysis that you can put on top of there. It's pretty funny that people like to do that, though. The analyst further highlighted that due to the decline in on-chain activity, it was unlikely that Bitcoin will move north anytime soon. He said it is unlikely that Bitcoin will see its next price move up, and it may even see a move to the downside because of freaking transactional value going down. Yeah, that's interesting to me. Miners, people put up that argument, I always have a counter. Transactions, I always have a counter. On-chain activity as a whole, I always have a counter. It's pretty funny. Then, this is what everyone got wrong about Bitcoin's corrections. Everybody got something wrong? That's also false. It is always false. There's nothing that you can definitely show. But this article I might talk a little bit more about later, because it's quite in-depth, quite elaborate. Do I think it's juicy? No. Do I recommend you guys to read it though? No. The return of miners, the leaving of miners, the on-chain activity, all that type of stuff. It is so hard to say whether or not that actually has any relevance whatsoever. It is really, really difficult to say, mostly on the basis that we do not know if there are some bigger parties that are manipulating the price to follow this type of trend or follow this type of line to make you feel like you have some sort of control or some sort of prediction would work. I firmly believe that if you follow these types of patterns, ultimately you'll just lose money. Ultimately, you'll just keep losing, and you'll not be a successful trader in that regard, because I just personally don't think the on-chain metrics of this type are something that you can help determine the price in the future for. These are either lagging indicators, which basically show activity in the past, or these are maybe like inferences over periods, but the landscape is changing so quickly. So crypto, with this all-time changing thing, you can't really do too much inference basically from something that changes this much, and something which we cannot prove has been the same throughout these years. And we cannot really prove that any of this stuff that happened in 2017, for example, is still relevant to what we are seeing now, because we don't know what players were there then and how people are viewing it now, what people are in, and what people's goals are and whatnot. But yeah, that is just my opinion.